Bollinger Bands are one of the most popular indicators in technical analysis, but they're often misunderstood and confusing to new traders. Today, we're going to break down the Bollinger Band, things to watch out for while using them, and backtest a simple strategy so you can see it in action. Welcome to Stark Smart. The Bollinger Bands were conceived by the Venerable John Bollinger, seen here. Wave hi, John. Close enough. The bands are actually quite genius in their simplicity. There is a middle band, which is just the 20 period SMA, and at each point along the band, two standard deviations are plotted above and below the bands. Now, if you slept through statistics class or you're interested in reading about how the bands are actually calculated, I'll leave a link to further reading in the description of this video. Otherwise, it's not 100% necessary when you're just starting out for you to know about what's going on under the hood here, so you can just believe. The Bollinger Bands give us reading of volatility in the market. The wider the bands are, the more volatile the market is. The closer they are together, the less volatility. Periods of lower volatility, aka consolidation, are such a key feature of reading the Bollinger Bands. This situation even has its own term, the Bollinger Squeeze. Typically, the longer and tighter the squeeze occurs, the more substantial the eventual resolution of the squeeze will be. A move from a squeeze into a period of higher volatility is called a breakout. Breakouts can go either way after a squeeze. As you can see here, this is a breakout as well. As price approaches each band, price tends to want to bounce off of that band. But look at this area right here. Sometimes the 20 period moving average can actually act as support and, as we see here, resistance. Price bounced off the bottom band, came up to the moving average, rejected, then came back down to the bottom band. In this way, you can think of the Bollinger Bands as a game of table tennis between the bulls and the bears, with the 20 MA acting like the net. A lot of the time, the price, which is the ball in our tennis game metaphor, will make it across the net, but every once in a while, the ball will hit and bounce back towards the player that served it. So, off to trading with Bollinger Bands. John Bollinger himself had 22 rules to actually using the Bollinger Bands, which we won't be covering here in depth just for the interest of time, but I have linked them down below. Mr. Bollinger also specifically stated that the bands should not be used just by themselves. Now hold on, didn't I just make a video where Bollinger Bands were the only indicator I had on the chart? Well, yes, I did. The difference there is that I was using them as part of an investment strategy in buying dips, not a trading strategy. I wanted to keep the chart as simple as possible to explain the DCA concept, and really the Bollinger Bands could have been replaced with a multitude of other indicators. So, there are many ways to trade off of the bands, but here are three common strategies. Strategy number one, look for the price to approach the bands. When price reaches the top band, you can look for a short play. When price is at the bottom band, look for long plays. But be careful here. Not every touch of the band signals a reversal. This is where other indicators can help you determine which position to take. Strategy number two, look for price to close outside of the bands. You really need to use other indicators here, as price closing outside of the bands could mean one of two things. Either you're going to get a continuation of the trend, or you're going to get a rejection and reversal. The only way to guess which direction it will go is to use other indicators to help guide you. Strategy number 3. Wait for the bands to be in a clear slope, either up or down, and make trades in the direction of the trend when price hits the middle band. So let's take what we've learned so far and test out a very simple strategy with the Bollinger Bands that we can later come back and improve once we practice with trading with them. Keep in mind that the right way to build a winning strategy is to test it yourself multiple times. This diagram should be the foundation of every strategy you ever attempt to work with, whether you saw it in a book, in an article, or even from a technical analysis YouTuber. Never, ever, ever immediately take a strategy that someone else says is a winner to the real market and trade it using real money until you yourself personally has tested it in both backtesting and paper trading. So your path to success here is to first start with defining your rules. Then you're going to move on and backtest those rules either manually or with a bot. And maybe we'll talk about botting later in a different video. After you've backtested it, see if you've gotten good results. If no, then you need to refine your strategy and return back to redefining your rules. If you did get good results, then you're going to move on to paper trading the strategy. And then you're going to see if you get good results there. If you don't, move back to refining your strategy and enter that loop again. But if you do get good results, then now it's time to live trade with real money. So let's go ahead and set up some simple rules that we can use for our very first Bollinger Band strategy that we can backtest in the market. So first thing is we are going to pair the Bollinger Band with default settings with the 200 EMA or exponential moving average. The exponential moving average is going to tell us which direction the market is going in, basically. We're going to only enter long trades, so we're not going to try to short the market just yet. And we're entering only when price is above the 200 EMA, signaling that it's a bullish market. We're going to watch for the candle to touch the bottom Bollinger Band. And when we enter the trade there, we're going to set a stop loss for the previous swing low. Or if the previous swing low is very close to where price is right now, the previous swing low before that. Now, to note here, if price is very close to the 200 EMA, you might want to just tighten up your stop loss a bit or skip those trades altogether. And the reason why is you're in an area where it's possible for the price to dip back below the EMA 200, thus signaling a bearish market cycle. And it's a good way to get eaten alive when you're just real close to that EMA 200. We're going to set our take profit for 1.5 profit ratio. Basically, what that means is if I put in $1, I would take profit once that dollar turns into $1.50. And I'm going to throw a lot of links in the description so that if you need any more information about these concepts that I've glossed over just a little bit, that's going to be there for you. Okay, so let's get to it. I'm going to backtest this strategy using TradingView and the replay feature, and let's see how we do. So I wanted to real quickly just go into a couple of these trades in slow motion so you can actually see what I was doing. So if we look at this area right here, we can see that this candle, this red candle right here, touched the bottom of the Bollinger Band and actually went outside of it. So on this candle right here, we entered the trade. And I used this tool right here in TradingView, this long position tool. And this long position tool, if I just drop it real quick on the chart, you can see that I can move my stop loss and target profit area, and there's a risk reward ratio, and you can see that change as I move this up and down. So that's how I dialed in my 1.5 for these trades. So here is this trade right here, and you can see that this closed out in profit. We took profit and we came up a little bit, so we didn't miss out on much profit here because it came right back down. The next trade, this candle right here, this red one, and that's a terrible arrow, I'm very sorry. That it touched the bottom. So we entered on the next trade, that next green candle, and we set our profit at 1.5 again. And you can see this was a successful trade. But price actually kept going up, so we did miss out on some of this. So if you're a little bit more advanced and you are trading on a platform that allows it, I highly suggest you use trailing stop losses and follow the price action above. And that way you don't miss out on as much profit if looking at this chart just kind of kills you that you missed out on this move, because we didn't actually hit the Bollinger Band on the bottom over here to signal a buy-in using the current strategy rules. So I hope that's a little helpful to kind of really dial in how I was making these trades, making these calls. Let's actually see how I did. So here are the results. Just for reference, I have the rules set up here. And for the back test, I started with a theoretical account that had $1,000 in it. And each trade that I made was 5% of the account. So you can see all the results. The winners are in green, the losers you can see are in white. And if I scroll all the way to the bottom, you can see I made 95 total trades. I was really hoping to get to 100, but just didn't quite make it. The starting balance, of course, was 1,000. The ending balance was $3,992, or a 299% gain on our account. Our win-loss ratio was 54%. Now I'm saying our, it's really mine, because if you were to manually backtest this like I did, you might have made different decisions than I did, because we're human. So your win-loss ratio might be better or worse than mine if you give this a shot. And I highly recommend that you do, especially if you're just learning about Bollinger Bands, which hopefully that's why you're here. But keep in mind that win-loss ratio, even though this was a successful strategy, we didn't lose more money than we made. But with 54%, that's only 4% better than just flipping a coin. So surely we can do some things here and tweak this strategy and make it better. Remember that flow chart? We can make this better by just adding and tweaking rules. Maybe we change some settings here and there. But really, you're going to be spending a lot of time doing manually back testing this way. So, what if there's a simpler solution? Well, we have bots. So, in my next video, I'm actually going to show you how to set up a trading bot using the Bollinger Bands, and it makes things a lot easier to tweak the strategies and see what we can do from there. See if we can get better than a win-loss ratio of 54%. So make sure you hit like and subscribe to the channel and hit that bell icon. Make sure you get the indication that I have posted that next video. We're also going to be doing some more technical analysis videos of Bitcoin, Ethereum, things like that. And I hope that I will see you guys there for that. If I don't, I hope everyone has a lovely holiday season, and I will talk to you again soon.